Good day everyone, we are from Group 12. Company analysis that we do are Padini Holdings and Fast Retailing. The member of Group 12 is Terry Henry, Umi Nadia, Siti Nur Azlin and myself, Amira Rosli. First and foremost, I would like to present about the background and nature of both business. Padini Holdings Berhad is a Malaysia-based investment holding company. Padini Holdings Berhad's long-term goal is to position itself as the industry standard. In 1971, Padini established his business, which was first run as a sole proprietorship, and in 1975, the company made its debut in very competitive retail industry by introducing the Padini brand as its main products. Fast Retailing is a global developer of fashion brands such as Uniqlo, GU, and Theory. The company offers one-of-a-kind products that are made from high quality and highly functional materials, and it sells this product at reasonable prices. Next, business model evaluation, which I will present only a few parts of it. As the matter of value propositions, Padini is in the fashion industry, which is a very competitive market that is continuously being entered by new business. To influence clients' buying decision, the product itself is one piece of the puzzle, where the power of the brand image in the degree to which the buyer identifies the brands are also crucial variables to consider. While fast retailing value propositions include clothing products that are viewed as components to be worn with other things on overall possessing a basic design with excellent quality at a substantially cheaper price, and clothing that purpose novel performance capabilities such as heat regulations. To conclude the revenue generation of Padini, their revenue climbs by 74.7% to 888.57 million ringgit Malaysia from 508.56 million ringgit Malaysia. While for Fast Retailing, the company achieved consolidated results that show a significant increase in both sales and profits, where the profit increased by 4.51% to 153.3 billion yen. Padini's competitive advantage. Padini have many retail outlets. There are 330 retail shops across Malaysia and neighboring nations, including Hong Kong, Singapore, Indonesia, Thailand, and Brunei. In Malaysia, the largest retail establishments are located in the nation's most notable shopping malls, including One Utama Phase 2 Shopping Centre, Mid Valley Mega Mall, Sunway Pyramid Shopping Mall, and more. With so many retail locations, Padini's competitors cannot readily impact its sales. Despite this, Padini Holdings would continue to be a market leader. Next, Padini's fashion design team. All of Padini's items are created by its in-house fashion design staff. Therefore, buyers cannot purchase the identical shirt design at other stores even if they can afford to pay more. Fast Retailing's competitive advantage. First, delivery system supporting a clear brand promise. Defining a clear brand promise and consistently delivering on the promise across all touch points of the customer experience journey are two of the greatest difficulties for every business. Successful brands build organizational and operational structure that assist the implementations of brand delivering strategies. Then, product development approach and efficient supply chain. Tadashi Yanai frequently asserts Uniqlo is a technological firm, not a fashion company. In fact, the brand's approach to clothes production has more in common with the interactive approach to product development adopted by the technology sector than with the cyclical, trend-driven rhythm of the fast fashion retail business. SWOT analysis for Padini. The strength is having a strong brand recognition because it is well-known as a major player in the textile and clothing industry, and also the products are suitable for all age. Padini's weakness is its lack of visibility to its long-term business strategies because they always focus on short-term goals. Other than that, extra cost of building new supply chain and logistic network because it can be highly costly. And one of the opportunities that Padini have are government rules are increasing, making it difficult for unorganized business to operate in the retail. One of the threats are changes in the political climate, such as the trade war between the United States and China, may have an effect on Padini's local and worldwide markets. Fast Retailing strength. Interdisciplinary teams. At Fast Retailing, horizontally integrated teams are boosting operational speed, fostering increased agility, and keeping the company flexible to compete with new rivals. The weaknesses are competence to answer the opposition. Fast retailing has failed to adapt to the agile upstart competition in the retail industry's dynamic environment due to the company's deliberate decision-making process. And one of the opportunities, adding value to the data economy. The success of fast retailing's analytics program has created new income stream for the organization in the retail business. The trend is increasing fast retailing's pay structure. Post-COVID-19, there is a considerable increase in pay, particularly for positions requiring human connection. And increasing salaries can put downward pressure on fast retailing's margins.
Present about economic outlook for fashion industry. First, I will explain about the future prediction on fashion market. In the future, the fashion market is expected to have significant change and advancement. The rise of technology will reshape the industry with innovations such as 3D printing, virtual reality, and augmented reality, transforming the way products are designed, manufactured, and experienced by consumers. Online shopping also will continue to thrive with greater integration between online and physical platforms. Overall, the fashion industry of the future will prioritize sustainability, technology advancement, diversity, inclusivity, influencing all aspects from design to product, retail, and consumer experience. Next, I will present about global and Malaysian fashion industry. Malaysian fashion market is expected to rise and provide exciting new prospects. Malaysia provides a distinct version of traditional and contemporary fashion inspiration because its dynamic and diverse culture. Local designers have been steadily increasing in number within the business and becoming more well known both local and abroad. Malaysian fashion companies are renowned for their investment workmanship blending of continental design with contemporary aesthetic. Government efforts to support the textile and apparel industry have accelerated this expansion by nurturing entrepreneurship and artistic skill. Additionally, the round of used social media and e-commerce platform has made it possible for Malaysian fashion firms to reach a broader audience.
My part is for the company ratio analysis. The first is liquidity ratio. The current ratio of Padini holding Berhad have been increasing over the year from 2.93 in 2018 to 5.4 in 2021, indicating an improvement in the company's ability to meet in short-term obligations. Also be increased from 1.94 in 2018 to 3.58 in 2021, indicating the company's ability to meet short-term obligations using the most liquid asset. While the cash ratio of Padini have been fluctuating over the year with a peak of 3.53 in 2021 and a low of 1.73 in 2018. The working capital ratio of Padini have been fluctuating too, with a peak of 21.63 in 2018 and a low of negative 4.48 in 2020. Overall, for Fast Retailing Company Limited, the current ratio, the quick ratio, the cash ratio have fluctuating from 2018 until 2022. Next is leverage ratio. The first is debt of equity ratio. Padini holding Berhad have been fluctuating over the year, ranging from 3.23 in 2019 to 68.3% in 2020. This indicates that the company have been relying more on debt financing during certain period. Debt ratio. The company have been fluctuating too, with a significant increase in 2020 to 2088.08. However, it's important that a negative debt ratio is reported for 2018 and 2021, which may be due to specific financial reporting practice or adjustment. Equity ratio. The equity ratio Padini holding Berhad have been varying over the year, with a low of 3.44 in 2020 with a high of 18.31 in 2018. This indicates the proportion of the company assets that are financed by equity. Meanwhile, debt to capital ratio. The debt for the Padini has been fluctuating, ranging from 3.13 in 2029 to 40.58 in 2020. This ratio represents the proportion of the company capital that finance five debt. Fast Retailing Co. Limited debt to equity ratio have been fluctuating over the year, ranging from 44.79 in 2022 to 95.58 in 2020. That the company have been relying more on debt financing during certain period, like COVID-19. The data show of Fast Retailing Co. Limited have been fluctuating over the year for the debt to equity ratio, debt ratio, equity ratio, and debt to capital ratio. For the debt ratio, have been negative debt ratio reported for 2019. Management efficiency. For the Padini Holding Berhad, inventory turnover ratio, the data have been fluctuating over the year with a high of 4.40% in 2018 and with low of 2.6 in 2021. The account receivable turnover ratio, the data show that been increasing over the year with a high of 149.7% in 2022. This ratio indicates how efficiency the company collecting payment from the customer. Account payable turnover ratio, the account have been fluctuating over the year with a high of 2.23 in 2021 and a low of 4.94 in 2022. The analysis management efficiency ratio for Fast Retailing Co. Limited. Inventory turnover ratio have been relatively stable over the year, ranging from 2.48 in 2022 to 2.86 in 2018. This ratio indicates how efficiently the company managing the inventory. Account receivable turnover have been fluctuated with the high 51.14 in 2022. This ratio indicates how the company collecting payment from the customer. Account payable turnover ratio. The account payable turnover ratio for Retailing Co. Limited have been decreasing over the year with the low 4.94 in 2022. As is the asset turnover ratio for Fast Retailing Co. Limited have been decreasing over the year with the low of 0.81 in 2022. This ratio how the company generated revenue from the asset.
Padini Holdings Berhad's financial data from 2018 to 2022 showed stable gross profit margins, declining in operating profit margins, and improvement in net profit margins. Return on assets and return on equity declined, but a significant increase in earnings per share in 2022 suggests a recovery. Net profit margins showed volatility while return on assets and return on equity declined. EPS showed positive growth from 2018 to 2021. Padini Holdings Berhad's market value per share fluctuated between 2018 and 2022, with a significant increase in 2021 and a decrease in 2022. Fast Retailing Berhad's market value per share and dividend yield increased from 28.99% in 2018 to 54.23% in 2020. Investors should consider other financial metrics, company performance, and industry peers before making investment decisions. Padini Holdings Berhad's share price has experienced more volatility over the past few years compared to Fast Retailing. In 2018, the company had a share price of 5.78 Malaysian ringgit per share, while Fast Retailing had a price of 8.310 Japanese yen per share. In 2019, the gap narrowed, and in 2021, Padini Holdings Berhad's share price increased to 17.10 Malaysian ringgit, while fast retailing price dropped to 12.150 Japanese yen. In 2022, Padini Holdings Berhad's share price fell to 6.64 Malaysian ringgit, while fast retailing fell to 7,900 Japanese yen. Investors should carefully examine both companies' share price to avoid future volatility. As a conclusion, Padini Holdings Berhad, a Malaysian apparel shop, has experienced steady growth in revenue and earnings. However, concerns about its ability to diversify beyond the home market and e-commerce sites persist. To remain competitive, Padini must expand its global reach through mergers, acquisition, and strategic partnership. While Uniqlo, a Japanese retail firm owned by Fast Retailing Berhad, focuses on high-quality, affordable apparel but faces concern about excessive stock. To improve its market position, Fast Retailing should invest in new ideas, eco-friendly practices, and cutting-edge technologies.